Top headlines that we are tracking on Power Breakfast for you. Good morning in the Mumbai News Centre. I am Sonal Bhutra, and as I said, through the course of the day, we'll discuss those headlines in greater detail. But first up, let's take a look at the Asian markets because they are largely higher in trade today, and this despite a weak handover that we got from the Wall Street. So Taiwanese index absolutely flat, but some positive bias there. Hang Seng is the one which is surging in how. Now remember, this particular index was down almost 4% in trade yesterday, so it is recouping some of those losses, so it's up 2% as we speak. We have Kospi, which is up 0.4%. Shanghai is up 0.8%. But do remember, restrictions and protests in China against those COVID restrictions continue, and that is a developing situation. SGX Nifty, despite this green on the Asian screen, is indicating that the start for our own markets could be in the red. It's a 60-point downtick that SGX Nifty is indicating. But remember, yesterday as well, it was indicating a 90-point downtick. But well, things were different, and we did see a record high on the Nifty as well for our own markets. Moving on, well, global investors continue to monitor the protests unfolding in China against the government's zero-COVID policy. Authorities deployed heavy policy presence in Beijing and other major cities to deter a repeat of the weekend demonstrations. CNBC's Sam Vedas gets us the latest on this one.
Yeah, the streets noticeably quieter up in Beijing and Shanghai, but in place of the protesters now, we are seeing certainly more boots on the ground by the way of police, certainly stepping up security to deter those demonstrators and those protesters after that rare show of defiance over the weekend, with, of course, many people taking the streets right across the country over their frustration, certainly with the zero COVID strategy at the moment. So what we have seen is these blue barricades being erected in places like Shanghai, and we've also seen more police presence and police cars certainly on the streets at the moment. We're also seeing that police are going around doing search checks on people, looking at their phones for VPNs and any apps, of course, that aren't allowed in China, apps like Twitter, Instagram and Telegram, which have been used apparently to circumvent, of course, the censors in China. And that is, of course, to talk about these protests and organize where, of course, they need to be at this stage. But right now, we're not seeing a lot of coverage, of course, in local Chinese state media, unsurprisingly. A lot of coverage, though, certainly in international media. And we're also seeing some of these sort of anti-lockdown protests and vigils being held in other cities around the world, in places like Sydney, Tokyo and London. And this was, of course, largely fueled by the anger over the fatal fire in Urumqi. And so the accusation is, of course, that those people were unable to leave their homes because of the lockdown. And so that is why we've seen these sort of vigils taking place in other parts of the world.
Okay, so this is, of course, a developing story. Sam, thank you so much for all the recent updates. But let's get in some opinion from Alliance's Mohammed Al-Aryan on the impact of these COVID protests in China on global markets and supply chains as well.
I think the impact on the commodities market makes sense because it's pointing out to slower economic growth, and the commodity markets won't be impacted by the supply disruptions. On equities, I'm surprised it's not more differentiated when it comes to U.S. equities. I think the main story in the U.S. is the Fed, so Wednesday will matter, is the labor market, so Friday will matter. China, unless it gets to a geopolitical issue, I don't think it should matter as much as people seem to think it should matter for the U.S. market. So Europe, completely different. Asia, completely different. You cannot rewire supply chains overnight. Karl Bass was absolutely right. It takes a long time to rewire these supply chains. So what does it mean for those companies? It means supply uncertainty. What does it mean for us as a whole? It means the possibility that between what's happening in China, between the change in globalization as a whole, between reshoring, nearshoring, we may have an issue where inflation gets stuck at around 4%. I don't think it impacts the Fed in any way.
Okay, all right. That is some expert opinion coming in. But let's talk about the U.S. markets now. Wall Street ended yesterday's session sharply lower, with the Dow Jones falling almost 500 points. The S&P 500 and Nasdaq ended with cuts of 1.5%. Major indices came under pressure following COVID protests in China. Additionally, investors await more economic data and commentary from Federal Reserve later this week. CNBC's Steve Kovac gets us a wrap of all the action on Wall Street.
Social unrest in China over strict COVID restrictions is raising fears global supply chains may be seriously disrupted. Those fears contributed to losses today on Wall Street. The Dow ended almost 500 points lower, down 1.5%. The S&P also closed with a loss of 1.5%. And the Nasdaq finished down almost 1.6%. Apple is already feeling the effects of protests at the Chinese factory that makes a lot of its iPhones. It's reportedly facing a production shortfall of nearly 6 million devices, and iPhone 14 Pros ordered today at Apple's site aren't expected to be delivered until after Christmas. Apple shares fell by 2 2/3%. And the crypto firm BlockFi has filed for Chapter 11 bankruptcy. Back in July, when it was reeling after a series of crypto setbacks, FTX came to its rescue with a big loan and purchase offer. But with its would-be savior now in Chapter 11 itself, BlockFi is also going the bankruptcy route. That's the action from the U.S. market. Back to you in Mumbai.
Okay, all right, that's all the action from the US markets, but let's get you some important commentary coming in from Federal Reserve members. St. Louis Fed Reserve President James Bullard remained hawkish as he said the central bank needs to continue raising rates until inflation was reined in. In an interview to a news website, he said that, and I quote, we have got a ways to go to get restrictive. He maintained that we are going to have to continue pursue our interest rate increases into 2023, and there's some risk that we have to go even higher than 5%. On the jobs market tightening, Bullard noted, I don't think that the feedback from the strength of the labor market to inflation is nearly as strong as many people portray it. Meanwhile, in a speech made at the Economic Club in New York, John Williams, president of the New York, echoed Bullard when he said, and I quote, overall demand for labor and services still far exceeds available supply, resulting in broad-based inflation, which will take longer to bring back down. Speaking on the road ahead of the Fed's monetary policy moves, the New York Fed president said, and I quote, further tightening of monetary policy should help restore balance between demand and supply and bring inflation back to 2% over the next few years. Speaking with reporters following prepared remarks, Williams said he sees a somewhat higher path for interest rate hikes than projected in September, and that he expects the central banks will hold rates at peak level throughout at least next year. All right, that's a slew of opinion coming in. In fact, let's get in some more for you. Let's listen into what David Zerwas of Jefferies makes of the commentary coming in from Fed officials and his expectations from the Fed chairman's speech due on Wednesday.
The fixed income markets have really not been in focus much at all today. I think the 10-year notes moved a few 30 seconds and the 2-year notes hardly budged, although we are at some of the most inverted levels in 2s, 10s that we've seen since the late 70s, early 80s. This is really, I think, a pullback in equities after a pretty hectic run up toward the, not the top end of the range, but toward the upper half of the range we've been in since June. And I think people are rightly a little bit nervous going into Jay's speech at 1:30 on Wednesday. He hasn't been very friendly for the market lately, so I think it makes some sense to be a little bit cautious. It's really an opportunity, I think, for Jay to set the stage and tell us, you know, is he leaning more toward a Jim Bullard type view he got thrown out there, or is it something a little more mainstream conference? They're looking at the lags, they're looking at the cumulative amount of tightening. So they have the ability to kind of fall back on that if they want to pivot toward much lower rate hikes, or even toward a period of waiting and seeing at some point in early or mid 2023, which I think is probably what they're going to do. But again, I think they're hedging their bets. They're waiting and seeing what inflation does, how quickly it comes down, and I think they're also looking at expectations.
And with that, it's time for our final update on our global market wrap this morning. Week handover from Europe as well as major averages closed Monday's trading session lower. The French CAC ended 50 points lower, the German DAX slipped over 1%, and the British FTSE closed with a 12-point cut. European Central Bank President Christine Lagarde on Monday said that inflation in the Eurozone has not peaked and risks turning out even higher than expected, hinting at a series of interest rate hikes ahead. Remember, inflation in the Eurozone hit a record high last month. Speaking to the European Parliament, she said, and I quote, we do not see components or the direction that would lead me to believe that we have reached peak inflation and that it is going to decline in the short order as well. Welcome back, and as promised, we'll now tell you how the overnight cues that we just spoke about are going to impact our own markets. We have our research team joining in to tell you just that. It's our Power Prep segment, and we have with us Vivek Mangalam, and we'll also be talking about stocks that are likely to be in the news as well. First up, Vivek, tell us, what is the market setup looking like today?
Well, good morning. Yesterday was a historic day given the fact that you saw the benchmark index hit a lifetime high. And however, what market participants were watching closely was the fact that this came despite the fact that we actually saw quite a bit of weak cues from global markets. Even today, the setup is not really much different. Overnight global cues, like we mentioned earlier, has been quite subdued with most of the US markets ending in the red. Even European markets ended largely in the red. However, the extent of the fall was not the same as the US markets. Now, interestingly, gold prices also fell lower by close to 1%. Crude prices, after hitting a multi-month low yesterday, did see a bounce back. This was on fears of a significant OPEC plus production cut that could come as far as crude was concerned. Now, going forward, some of the key events that we are tracking, there's a largish IPO, Dharmaraj IPO yesterday on day one did see healthy subscription over there. In fact, the important thing to watch out for would be the fact that how exactly are Asian markets performing. This is in the context of the fact that as China COVID cases rise, you're actually seeing quite a bit of unrest, and this is something that has led to significant sell-off across both Asia as well as US markets. So far, this hasn't impacted the Indian markets. However, today the SGX Nifty is indicating a gap down start. So it'll be interesting to see whether we see the kind of pullback that we saw in yesterday's trading session.
Yes, it will be. So those levels important to watch. Thanks a lot for that, Vivek. Let's talk some stocks now. Surbhi is joining us to tell you which stocks will be in the news today. Surbhi?
I have a few stocks on my radar today. The first one is NDTV, where Adani Enterprises says that the NDTV promoter RRPR has agreed to issue 99.5% of its equity to Adani Group's subsidiary VCPL. Next is Lupin, where the company's Brazilian unit acquires rights to 9 brands from Bosch Health. NBCC, the company gets 2 orders worth rupees 272 crores. And lastly, the 2 recent listings have reported their Q2 numbers. First one is 5-Star Business, where the loan book is up 8% sequentially, the net interest income is up 10%, and the OPEX is up 12.5% at 100 crores versus 89 crores last quarter. Fusion Microfinance, the AUM is up 9%, the net interest income is up nearly 31%, and the PAT is up 27% at 95 crores versus 75 crores last quarter.
Okay, Surbhi, thank you so much for all those details. Finally, Mangnam is joining in with all the cues from the FNO space. Hey, Mangnam.
Good morning. So, the SGX Nifty is indicating a muted start to kick things off, but yesterday was a record high for our markets, and thereafter we did see a bit of a cool off, almost 50 points from the highs out there, and importantly that was led lower by the Nifty Bank itself. So to that extent, that will be an important index to watch out for in today's trading session. But as far as cash markets are concerned, we saw the FIs and DIIs, both buy DIIs of course bought sub 100 crores, but net the institutional flows were positive to the tune of 1,000 odd crores. And index futures as well, the FIs bought 1,400 odd crores, and this after a session where they sold in index futures. So 16,000 long contracts being added, just about 700 short contracts being added, as a result of which the FI long exposure, which at the start of the series was 77%, fell to 71%, and after yesterday's move actually has clawed back to around 73 odd percent as well. What was interesting was the action that we saw in index options. The FIs are protecting themselves for any downside that comes by buying a lot of puts, and with the levels at which the India VIX is at right now, the put buying is a lot more affordable. So 78,000 puts is what they've bought, but at the same time they believe that these dips will be extremely shallow, and that is what gives them confidence to go ahead and write puts as well. So they've written about an equal number of puts on the downside as well. What were the active options? We had 18,500 call writers who actually shed their positions as the Nifty moved higher yesterday, and as a result of which that turned into 18,500 put writers. So those were extremely active for a premium of almost 4850 odd rupees. 18,450 is a mark that we'll be watching out for in terms of the immediate support. On the way up, 18,600 put also saw some writing, as did the 18,600 call. What are the levels that you're watching out for on the Nifty? Well, the 5-day moving average, the 5-day exponential moving average, as well as the 10-day exponential moving average are a bunch of things that we'll be watching out for on the Nifty. 18,369 to 18,451 will be important support zones. And whereas for the start, we'll watch out for whether the Nifty goes ahead and crosses the record high that it hit yesterday. Watch out for Reliance, what it does.
Oh yes, and that was a big contributor to the Nifty gains that we saw yesterday, right? Manglam, Vivek and Surbhi, thank you so much for joining us, taking us through what to expect from the market moves today. With that, we'll slip into a break. Up next, we'll get you the cues from the commodities market. Stay tuned.
Thank you for that. Well, it continues to be as volatile as ever. On one side, you have the China protesting, the first protest and the biggest protest ever against the COVID flare, and the way it is spreading to other cities as well, the protest that is. On the other side, you also are looking at weak demand concerns in China, in US and Europe as well, and that's weighing on to many of these industrial commodities here. For the metals, it is about copper, which is seen a bit of a decline continuing today as well. In copper, when you look at the smelting capacity, that is lower than the mining capacity right now. So there are more investments that are needed here. Some more slide is what you are seeing in case of steel as well. Iron ore seems to be slightly supportive. And yes, in case of crude oil prices, after hitting an 11-month low that we saw yesterday, there is some bit of a buying coming here. Even then, you are looking at crude prices down by 11% for the month of November. It clearly is going to be about the U.S. non-farm payroll data on this Friday, and then the 4th December meeting of OPEC and allies, where the markets are now anticipating that you could be looking at further production cuts as well. As of now, OPEC and allies are producing nearly 3 million barrels per day less than the agreed quota.
Oh yes, a lot of volatility, and we are watching out for a lot of updates from the global markets as well. Manisha, thank you so much for making sense of moves in the currency and the commodity markets as well. And as we wrap and put its curtains down on this edition of Power Breakfast, we'll talk about crypto universe. Now, crypto firm BlockFi has filed for bankruptcy in the US following the collapse of FTX. The company had already halted most activity on its platform, citing significant exposure to FTX. BlockFi has also sued a holding company for FTX founder Bankman-Fried to recover Robinhood shares. CNBC's Kate Rooney filed this report with us.
This is the latest collateral damage we're seeing from FTX's downfall. The crypto lender BlockFi filing for Chapter 11 protection this morning in New Jersey. And BlockFi was one of a handful of firms that was supposed to be bailed out by FTX, which of course is now going through its own high-profile bankruptcy. We did just get some more bankruptcy paperwork where BlockFi says it was faced with what it called a severe liquidity crunch due to the unprecedented expedited collapse of FTX. They go on to say that FTX's apparent rescue, which began in the summer of 2022, stabilized BlockFi, but they say that was short-lived, and over the past few weeks, exposure to FTX exacerbated rather than cured BlockFi's ailments. It also says that BlockFi has substantial exposure to FTX, and the Chapter 11 process, they say, will allow BlockFi to run an orderly process and to maximize value they say they can deliver to clients at this point. The trouble for BlockFi started back in early summer. If you remember that implosion of the hedge fund Three Arrows Capital, FTX had first swooped in with about $250 million in the form of credit, a line of credit back in June. That increased to $400 million in July when FTX had also agreed to buy the company, or it had the option to buy the company. As FTX went under just a couple weeks ago, BlockFi once again had to halt customer withdrawals. And in the filing, BlockFi does say it's got more than 100,000 creditors, and then liabilities and assets stand between $1 billion and $10 billion, guys. Back to you.